No one here is prepared for what's about to happen. Hey there, just wanted to give you a heads up that the markets are seeing some wild swings right now. We'll be breaking down Tom Lee's words, which to be honest I disagree with, and the craziness emanating from Japan. The reverse Japan carry trade has been floating around, and some individuals think XRP will drop and then suddenly burst to $1,000 per coin before the year ends. Some of you may or may not be aware of this. There are also some who, like me, have an alternative perspective because everything going on right now is absolutely bonkers. I will be disclosing that to you today. Things are moving quickly. Additionally, members of the XRP community in particular stand to lose out on a once-in-a-lifetime chance if they aren't prepared. Tom Lee, since he stated this yesterday, is the one I will begin with. His claim that the cryptocurrency market has hit rock bottom runs counter to M2, global, liquidity, and current market conditions. I'll elaborate on everything, including why it's a bad idea to trust permables at the moment if you want the best entries. Now, I will explain what he stated in detail. Second, he essentially stated, I believe crypto prices have bottomed and that during the next 8 weeks, the market would break the 4-year cycle that Bitcoin has been in. This time around, I don't see a 4-year cycle. Thus, according to Tom Lee, we have hit rock bottom and the 4-year cycle does not exist anymore. It turns out that's completely false, as we discovered today. Today, we're actually dipping lower. That then is the bottom he mentioned. Not precisely, but let's take it one step at a time since there's more to these changes than just an optimistic TV comment. Have a good listen before we go any further. Get the XRP Millionaire Blueprint Pro now if you want to know how the top 1% of crypto investors get ready for global liquidity shocks, how they think, what models they use, and what strategies they use for accumulation. Inside, you'll find out how these elite investors set up for the next big expansion phase. Furthermore, you will not find anywhere else the unique weekly XRP insider reports and notifications that are yours to keep. This is the place to begin if you want to stay ahead of this huge storm. The pinned comment below contains all the necessary information. Okay, then let's go on. In the span of an hour, more than $125 million worth of cryptocurrency was sold. Such a motion does not occur at random. The big picture and the current situation in Japan in particular are integral to this. Bitcoin briefly retreated to roughly $93,000 before breaking below $90,000 once more. It brought down the price of XRP and all altcoins. Strangest of all, this pattern is remarkably similar to one we noticed in the run of 2021. In that period, Bitcoin reached its highest point, experienced a severe correction, recovered to retest, failed, and subsequently fell. It looks like a case of copy and pasting when you compare that to the chart we have today. There was a peak, a correction, an effort at a retest, rejection, and now there is pressure to drop us back down. Global liquidity, not merely technical factors, is what is sustaining this entire system. Plus, there's something you need to know when quantitative tightening is in effect. Regardless of whether or not liquidity tightening occurs in the US, cryptocurrency is the most vulnerable asset class. That section is vital. Liquidity gets restricted globally if Japan, Europe, China, or Russia all tighten. Risk assets bleed when liquidity declines. End of discussion. The quality of the foundation is irrelevant. That XRP, Bitcoin, or Ethereum are all the rage is irrelevant. Prices fall when monetary resources are scarce. No, that is not conjecture. That is not an alarmist statement. Here is the process of a liquidity cycle. So, what's the latest news out of Japan? What sets this apart? For what reason has a reverse carry trade recently been a source of widespread alarm? So, let me explain. Within Japan, a macro shock is taking place quite large. Rate rise hints were dropped by the Bank of Japan earlier this month. At the same time, rates on Japanese government bonds have soared to levels not witnessed in more than a decade. Just the fact that all the people who invested in high-yield assets with low-yield yen loans is now unwinding their holdings is enough to spark off global deleveraging. Crypto, being highly leveraged and with little liquidity, is the first to feel the effects of the unwind as investors begin to withdraw funds from risky assets. Everything has been magnified by the depreciating yen. It's made people afraid. To obtain what we're witnessing right now, you need to combine fear with tightening, progressive liquidations, sell something against your will, declining spheres. Looking further ahead, you can see that these circumstances have been accumulating since the beginning of December. This was planned. The system was already vulnerable. Just today's drop set everything in motion. I should also let you know something else. Verification via on-chain data supports this. An attack on the Binance ETH pool caused a liquidity concern, which caused many to lose faith in DEFI. Furthermore, whale activity, such as the more than 2,000 Bitcoin withdrawals recorded today, may indicate that large players are cashing out or reducing their exposure to risk. There is no retail movement here. They have foresight. Therefore, these monetary adjustments are prudent, entering the meat and potatoes of the Bank of Japan's change. Now, in what would be the most significant move since 1995, they are anticipated to increase their benchmark policy rate from 0.5% to 0.75%. Would you like to know what transpired during the previous rate adjustment in the mid-1990s? It was a big financial crisis for Japan. This morning's arrangement seems disturbingly similar. Increases in bond rates and wages, a stabilization of inflation around 2%, and mounting pressure inside the system. There is a 76% to 93% probability that rates would be raised this month, according to swap markets and betting sites. At such a high level of probability, the market begins to respond prior to the policy's actual implementation. Bitcoin and other altcoins see their capital drained whenever carry transactions unwind. Because of the cryptocurrency market's low liquidity, the entire industry is at risk. Another sell-off is set off by the first. Liquidations are then initiated. The result is a domino effect of increased sales. A minor macro movement can quickly escalate into a brutal multi-day flush. These changes in Japanese yields have already caused losses of more than $600 million. A precipitous decline occurred in Bitcoin value. In XRP and other altcoins, there were violent imbalances. There is no crypto issue here. Embrace the unknown. Macro structure is given by this. And when liquidity around the world tightens, leverage traders are the ones that feel the pinch the most. Reduced global liquidity is a result of Japan's tightening. With a rising yen, global liquidity is diminished. Risk assets suffer losses as a result of lower global liquidity. When liquidity is tight in Asia, we have witnessed drawdowns of 15 to 30% in a single session. In the past, even the biggest market makers may be forced to de-risk their operations if this unwind were to intensify to the point where it resembled a mini crisis and drained liquidity from repo markets. The secret is right here. A genuine bear market bottom emerges under these conditions. The dip is real. This is not an edit, a genuine zero. That kind of bottom, if you're in the right place, can create riches that last generations. Most market participants sell out in the first hour or even later when liquidity tightens on a worldwide scale like this. Their failure to comprehend the underlying dynamics led to their liquidation. Drawdowns are nothing to worry about for investors who are familiar with liquidity cycles. They anticipate these events and take smart action when the market as a whole is responding emotionally. The significance of the current situation in Japan warrants more discussion. Most people assume it's limited to Japan, but when global macro shifts occur, Japan is frequently the first domino to fall. Shifts in Japan's interest rates have often been precursors to tightening elsewhere in the world. The yen carry trade is a major player in international finance. A fortune in trillions of dollars amassed through the global deployment of cheaply borrowed yen into yens, assets with greater yields. There would be an immediate shortage of funds when you unwind the deal. Equities, bonds, and cryptocurrency are all impacted by this. Crypto, being the most leveraged and diminutive asset class, reacts with the utmost speed and fury. At this very moment, that is precisely what is happening, which is why Bitcoin has such a hard time staying above critical levels. Because of this, XRP is displaying significant instabilities. This is why it appears like the whole cryptocurrency market is precariously balanced. The system is losing its liquidity, not because XRP is flawed or crypto in general, but because liquidity is becoming more scarce around the world. We can now go farther into the chart since the technical aspect properly supports the macro aspect. Viewed from a distance, Bitcoin's current structure is identical to the mid-cycle retracement of the 2021 cycle. In May of 2021, Bitcoin experienced its now famous crash after reaching a peak, correcting, bouncing near its previous high, failing, and finally plummeting severely. Looking at it now, you can see the pattern is very similar. As if history were a ballet, now we get to the important portion. That precipitous decline in 2021, nothing came to a close. Once liquidity conditions stabilized, the remaining bull run was triggered by the reset, and that brings us full circle. The macro environment, however, is already significantly more consequential than any event in 2021. The actions of central banks have a profound impact on the market today. You can't rely on cryptocurrency charts alone. You also need to consider interest rate expectations, global liquidity measurements, and the actions of big financial actors. While the 100-week simple moving average isn't something most people keep an eye on, it's one of the best indicators for spotting genuine accumulation zones in late-stage bear markets or corrections that occur deep in a market cycle. In periods of severe liquidity constraints, the optimum time to accumulate Bitcoin for the long term is when its price falls below the 100-week simple moving average. That same principle also applies to altcoins, particularly XRP. The asset is selling at a discount relative to its multi-cycle trend, which improves the possibility of long-term upside when XRP falls below its 100-week SMA. And the thing is, once again, we will be approaching that area. This is due to a temporary tightening of global liquidity and has nothing to do with the weakness of crypto or the collapse of the fundamentals. For this reason, I will not be selling my XRP or leaving the market. As I mentioned before, I am getting ready. I have money piling up. Whenever there is a macro liquidity squeeze, Buying below that level has historically been one of the best entrances of the entire cycle. So I'm waiting for the break below that simple moving average. We need to go further into the reasons behind this current event. There are other institutions that the Bank of Japan works with. The world's capital flows are influenced by their choice to raise rates or even just suggest a rate hike. This is because Japan is one of the top countries in terms of holding foreign assets. When interest rates in Japan climb, Japanese investors send money home. They provide bonds issued by other countries. They deal in international stock. Crypto isn't intrinsically linked to the traditional Japanese markets, but the liquidity ripple impacts all goods and services priced in USD, EUR, or JPY. Systemic deleveraging occurs when the yen increases. There are a number of highly leveraged participants in the cryptocurrency market, including institutional traders from Asia. Their operating hours are those of Asia. Advanced carry trade models are employed by them, and they immediately pull out when the funding runs dry. The worst liquidations tend to happen during the Asian trading window because of this. When major economies like China or Japan change the way the world expects liquidity, this happens. What set off today's wipeouts was precisely that. However, the intriguing aspect is here. In spite of the uncertainty and panic, there is vital data coming from on-chain indicators. Sellers are avoiding long-term holders. No, the XRP whales are refusing to give in. The total number of people who own Bitcoin is approaching an all-time high. Major asset exchange outflows are on the rise, rather than the decline. Capitulation in the mining industry, which typically signifies a big cycle bottom, is also not occurring. What this tells us is significant. This isn't a case of believers freaking out, not a loss of faith, but rather a forced deleveraging event caused by monetary policy tightening. The smart money starts to split from the herd at this point. So let's talk strategy. A liquidity-driven correction consists of 3 stages. First stage, reduce reliance on borrowing. At the moment we are in this situation, the price plummets as liquidation surge and long positions are wiped out. The market is vulnerable. Uncertainty grows. Some are demanding that the crypto era come to a close. Exaggerated emotions and spectacular candles are visible. Phase 1 is now well underway, with liquidations totaling over $600 million, driven by Japanese yields. Step 2, leveling off. This takes place when the rate of deleveraging decreases, volatility and price drops ends. There is less volatility. The market, however, remains unsettled. Individuals eagerly await affirmation. The Federal Reserve is their long-awaited target. Japan is their target. For indications, they patiently wait. The most astute investors gather here in secrecy. The crowd may be uncertain, but liquidity is starting to improve. Level 3, growth and reaccumulation. The following big step starts here. More money is available. Appetite for risk is back. In the process of deleveraging assets that were marked down significantly, see a price explosion. In the past, XRP has made its most significant jumps here. Not when everyone is on edge. Under these conditions of ambiguity, none will do. The system will reset and liquidity will restore. Just where are we in this cycle right now? We're well into phase 1 and heading into phase 2 soon. Thus, the following several liquidity flushes are expected to see the formation of the actual bottom. That is until Bitcoin and XRP both dip below the 100-week simple moving average. Your money is not being advised by this. During times of liquidity stress, the entire cryptocurrency market reacts negatively when Bitcoin takes a hit. However, XRP exhibits its own peculiar pattern of behavior. It isn't just an asset with risk. Furthermore, it does not reflect the ebb and flow of Bitcoin. As a cryptocurrency, XRP has always stood out. This asset has the unique ability to compress for a longer period of time, coil tighter, take more macro pressure, and then unleash its full potential in one powerful vertical motion. For that reason, it is consistently undervalued by those who rely solely on daily charts. Because it goes slowly, they see XRP as weak. But XRP isn't a late mover. The way it moves is unique. Bitcoin takes the brunt of liquidity squeezes such as the one Japan is currently causing due to its high leverage and open interest. The low liquidity and weak structural demand of altcoins causes them to bleed excessively. However, unlike other assets, XRP's long-term ownership base does not fragment. There is a lot greater consistency in its supply concentration. Additionally, if there is a worldwide tightening event, its market has a tendency to contract into very low volatility ranges. It is seldom an indication of weakness when XRP swings sideways in fear-driven markets. It's a pattern for loading space where there is compression and elongated cable. Looking at every big macro drawdown that has occurred since 2014 reveals the same tendency for XRP shocking compression. For a while, I was bored. a time of not believing. After that, an unexpected launch takes everyone, including XRP holders, by surprise. For XRP in particular, this is why liquidity resets are crucial. It is at its best when markets eliminate leverage. Once cash flows back into growth assets, it starts to thrive again. In addition, XRP has a track record of success following low volatility. When combined with what we are witnessing at the moment, all of that becomes quite intriguing. Bitcoin prices can fluctuate wildly. Ethereum has a lot of problems. It seems like altcoins are quite delicate. Still, XRP, once again, it is compressing. When XRP falls below macro moving averages as a result of global tightening, the chances of a significant breakout following the liquidity reset increase dramatically. Finally, we reach an issue that virtually no one in the crypto media is addressing. There is a distinct relationship between XRP and global liquidity. When liquidity changes, everyone trades Bitcoin first, since it is the crypto market's macro beta. When the cycle shifts from expansion to liquidity return, XRP makes a move. This domino effect is not new. As soon as the building returns to its expansionary phase, it will be the one to fall. Actually, that's a fortunate turn of events, because XRP is actually positioned itself for one of its most asymmetric setups in years, during the current liquidity unwind caused by Japan. What the typical trader doesn't pay attention to is the activity of its whale wallets. So, let's examine that. In the midst of widespread retail fear and the exposure of leverage traders, the biggest XRP wallets are covertly boosting their stablecoin holdings, removing tokens from exchanges, and preparing for future volatility. These individuals are not interested in conspiracy theories or waiting for 1000 XRP. These investors are well prepared for an expansion after tightening, having a strategic and data-driven approach. That is why it is a complete and utter rookie error to write off XRP just because it isn't moving. In the face of uncertainty, XRP does not burst. Once conviction sets in, it goes boom. After deleveraging is complete, carry trades level out, funding rates level out, and investors put their money back into growth, then certainty will return. Something remarkable emerges when you superimpose XRP's historical booms with global liquidity dips. After a liquidity squeeze ends, XRP always experiences a significant rally at no point in the past, never during, following that invariably. This is the main reason behind my intense focus on the 100-week simple moving average. I don't think it's magical, but it does reflect the point when price has traditionally met liquidity compression at the capitulation level. In reality, XRP isn't merely trading at a discount beneath that line. When the next expansion of liquidity comes, it will trade at levels that provide the maximum future return. We can discuss potential next expansions now regarding the structure, not the price forecasts. Rapid expansion of volatility occurs upon the reintroduction of liquidity. Usually, Bitcoin is at the head of the pack. Next is Ethereum. My term for what happens after that is structural release mode, and it's XRP's turn. The direction of compression changes from side to vertical because a lot of supply is sitting idle during the tightening period. That escalation usually happens fast. Put simply, XRP's most significant movements occur in the most unexpected times. That brings us full round to the significance of the present macro environment. As a result of temporary tightening, assets that gain from liquidity rebounds are well positioned, particularly when something as significant as a Japanese rate hike triggers it. A small number of assets are well positioned to benefit from that, and XRP is among them. The reason behind this is not hype or community tales, but rather the historical behavior of capital flows following macro resets. I am closely observing every single liquidation, swap market change, and unwind of yen carry for the same reason. Fear is not what I am seeking. Since XRP's previous expansion cycles have started near the base of the liquidity valley, that's where I want to find it. Because of this, the theory that XRP must fall before it can erupt is somewhat correct. It is unnecessary for it to crash. Tightening cannot be completed without liquidity. For it to finish, the macro flush is required. It must be cleansed of leverage. At that point, XRP will behave normally. When everything else slows down, it moves. And that is precisely where our current opportunity lies. Not while trying to predict the precise floor, not when it comes to pinpointing when the breakout will occur. However, this positioning opportunity is the deepest since the early 2020 cycle, and it is being created by the macro landscape, an opportunity that will go unnoticed by the majority due to their fixation on price rather than liquidity. Whoever positions themselves right as an investor will have a firm grasp of these macro cycles and be able to discern when global tightening turns into global expansion. Asymmetric consequences are experienced by them. Those who participate when markets are nervous do so not out of naive optimism, but rather a knowledge of where and when liquidity is flowing. Such reasoning is rewarded by XRP. It may seem like a lot, but remember that the best opportunities to profit from cryptocurrency often arise when the big picture is unclear. Once you dissect it, though, the pattern becomes apparent. With the tightening of liquidity and the flushing of debt, bottoms form and liquidity returns, followed by expansion. At the moment, we find ourselves smack dab in the thick of that story. The ones who figure out the cycle's inner workings will be the ones to write the following chapters. Now is the time to get the XRP Millionaire Blueprint Pro. If you are serious about learning how wealthy crypto investors position themselves during liquidity shifts, what strategies they follow, what accumulation models they rely on, and how they prepare for expansion phases. Learn the strategies used by renowned crypto strategists to build wealth that lasts generations within.